Hello, I'm Edward Sterling, macro analyst for Bulwark Bullion. And today we're going to talk about something that may be quietly changing the entire precious metals market as a whole: the US dollar. Because while investors have been focused on inflation, oil prices, and geopolitical tensions, something else has been happening in the background. The dollar has been strengthening, and historically, that has been one of the most powerful forces affecting gold and silver prices. In fact, if you want to understand why metals sometimes struggle even during uncertain economic periods, the answer often starts with the dollar. So what exactly is happening, and why could a stronger dollar be turning the tide for precious metals right now? Let's take a closer look. Gold and silver are priced globally in US dollars. That simple fact creates a powerful relationship between the currency and precious metals. When the dollar strengthens, metals often come under pressure. And the reason is straightforward. If the dollar becomes more valuable, it takes fewer dollars to buy the same ounce of gold or silver. So the price of metals, measured in dollars, often falls. This relationship doesn't hold perfectly every single day, but over longer periods, the dollar and precious metals frequently move in opposite directions, which is why shifts in the dollar can quietly reshape the entire metals market. Recently, the US dollar has been gaining strength again. Several forces appear to be driving that move. Interest rates in the United States remain relatively high compared to many other major economies. That attracts global capital into dollar-denominated assets like treasury bonds. At the same time, economic uncertainty around the world can push investors toward the dollar as a safe haven. So when global investors start moving money into dollar assets, the currency strengthens. And that strength can create pressure on commodities priced in dollars, including precious metals. A stronger dollar affects metals in a few different ways. First, it raises the cost of gold and silver for buyers using other currencies. If the dollar rises relative to the euro, yen, or other currencies, foreign buyers suddenly have to pay more in their local currency to buy the same ounce of gold. That can reduce demand internationally. Second, a strong dollar often reflects broader financial conditions. It can signal tighter monetary policy or higher interest rates. Both of those factors tend to make non-yielding assets like gold less attractive compared to interest-bearing investments. So when the dollar rises, metals often face pressure from multiple directions at once. What makes the current environment particularly interesting is that several macro forces are colliding at the same time. Inflation remains a concern in many parts of the global economy. Geopolitical tensions continue to create uncertainty, and central banks are still navigating the difficult balance between controlling inflation and supporting economic growth. Normally, those types of risks can support precious metals. But if the dollar continues strengthening, it can offset some of that support, which is why the currency market often ends up quietly shaping the metals market behind the scenes. Before we go further, if you're enjoying this breakdown of gold, silver, and the macro forces driving global markets, make sure to hit the like button and subscribe to the channel. We publish regular analysis on precious metals, inflation, and the economic trends shaping the global financial system. What makes the current environment particularly interesting is that several macro forces are colliding at the same time. Inflation remains a concern in many parts of the global economy. Geopolitical tensions continue to create uncertainty, and central banks are still navigating the difficult balance between controlling inflation and supporting economic growth. Normally, those types of risks can support precious metals, But if the dollar continues strengthening, it can offset some of that support, which is why the currency market often ends up quietly shaping the metals market behind the scenes. Before we go further, if you're enjoying this breakdown of gold, silver, and the macro forces driving global markets, make sure to hit the like button and subscribe to the channel. We publish regular analysis on precious metals, inflation, and the economic trends shaping the global financial system. Over the years, the dollar has acted almost like a lever for commodities. When the dollar weakens, commodities often surge. When the dollar strengthens, many commodities tend to struggle, and that pattern has repeated many times throughout modern financial history. It's not the only force driving markets, but it's often one of the most important, which is why serious investors watch the dollar index almost as closely as they watch gold itself. Because sometimes the real story in the metals market isn't happening in gold or silver charts at all, it's happening in the currency market. Going forward, the key question is whether the dollar continues strengthening. If U.S. interest rates remain high and global investors keep moving capital into dollar assets, the currency could remain strong. And that would likely continue creating headwinds for precious metals. But if the dollar begins weakening again, perhaps because interest rates fall or global capital flows shift, the picture could change quickly. A weaker dollar has historically been one of the most powerful catalysts for gold and silver rallies, which means the next big move in metals may depend just as much on the currency market as it does on inflation or geopolitical risk. The precious metals market is rarely driven by a single factor. Inflation matters, interest rates matter, geopolitical risk matters. But the strength of the U.S. dollar often sits right at the center of the equation. And right now, that currency story may be quietly reshaping the metals market. The real question now is simple. If the dollar continues strengthening, how long can gold and silver resist the pressure? Thanks for watching. If you're interested in gold, silver, and the macro forces driving global markets, make sure to like the video and subscribe. For more analysis, visit bulwarkbullion.com. I'm Edward Sterling, macro analyst for Bulwark Bullion. See you in the next one.